Alexander Green claims a $5 stock just deepened its ties to Nvidia, and I reveal the stock in this video so you don't have to buy Green's newsletter. Just keep in mind, no paid or proprietary info is given away here, and it's all guesswork based on clues in a publicly available sales presentation. Before we do anything, let's look at Green's recent stock picks to see how good he is. Green had a popular presentation hyping up the next Magnificent Seven in June 2024, and the first was ARM Holdings. This stock is down overall. The next stock was Cloudflare, and this stock has done very well and has doubled. 10x Genomics was the third stock pitched, and this one has done really bad, has lost half its value. Symbotic is the fourth stock, and it hasn't done well either. CyberArk was the fifth stock, and this one has done well. CRISPR Therapeutics was the sixth, and this was another stinker. And last was UiPath, and this one is basically break-even since last year. Now let's look at the email from Green and figure out the stock he's pitching. Green says, "This opportunity was too good not to pass along." The connection between chief investment strategist of the Oxford Club Alexander Green's $5 stock recommendation and AI giant Nvidia just got even stronger. Not only is this company investing $900 million to build the world's largest assembly plant for servers powered by Nvidia's advanced AI chips, they've now built their own artificial intelligence model with Nvidia's direct support and technology. The model was developed using 120 Nvidia H100 graphics processing units and is intended to be open-sourced with industry insiders to create an entire ecosystem of manufacturing AI applications. This deepening partnership reveals something most investors have missed. This $5 company isn't just manufacturing products for others, it's becoming a technology powerhouse in its own right. With thousands of patents, massive revenue streams, and now its own advanced AI capabilities, this stock is seriously undervalued at just $5. I'm going to reveal this stock in about 5 seconds, but just want to remind you to click the link in the description to check out Alpha Picks, which is by far the best stock picking service out there, and clicking that link gives you a $50 discount. The stock being pitched here is one Green has pitched before, and it's Foxconn, which is also known as Han Hai Precision Industry, and the ticker is HNHPF. Foxconn is a Taiwan-based multinational electronics contract manufacturer. It is best known as the world's largest electronics manufacturer and a major assembler of consumer devices, particularly Apple's iPhones. Founded in 1974, the company has grown into a critical player in the global electronics supply chain, serving top brands including Apple, Sony, Microsoft, Dell, and HP. While Foxconn is often associated with mass production and assembly, it is also involved in components manufacturing, industrial automation, semiconductors, and smart technology development. Its operations span across China, the US, India, Vietnam, and other global locations. Consumer electronics assembly is Foxconn's most prominent and well-known business segment. The company manufactures and assembles devices for some of the largest technology companies in the world. Apple is by far its most significant client, accounting for an estimated 45 to 50% of Foxconn's revenue. Foxconn assembles a wide range of products including smartphones, tablets, laptops, desktops, gaming consoles, and wearable devices. In this segment, speed, scale, and efficiency are critical, and Foxconn's vertically integrated model allows it to deliver massive quantities with short lead times. Additionally, Foxconn has a significant presence in the data center and networking hardware industry. Through its cloud network product segment, it manufactures servers, switches, routers, and data storage products for enterprise clients and cloud service providers. This segment plays a growing role in Foxconn's portfolio as demand for cloud infrastructure and edge computing increases globally. It's also where Foxconn has made strategic investments, including partnerships with Nvidia and other AI cloud technology companies. In recent years, Foxconn has been making a push into semiconductors. While it is not yet a major chip maker like TSMC or Samsung, it has signaled long-term ambitions in this space. Foxconn has acquired stakes in chip firms and launched projects related to silicon carbide semiconductors, automotive chips, and microcontrollers. Given the global semiconductor shortage and rising geopolitical tensions, this segment is seen as a way to diversify revenue and move up the value chain. Also, Foxconn is aggressively entering the electric vehicle market. Through its MIH Mobility and Harmony platform, it aims to become the Android of EVs, a flexible, open-source vehicle platform for other companies to use. It has established Foxtron, a joint venture with Yulon Motor, to design and manufacture EVs. Foxconn has signed deals to build vehicles for Fisker and Lordstown Motors, and it acquired a former GM plant in Ohio. This segment is still in early stages, but is a key pillar in Foxconn's growth strategy beyond traditional electronics. And lastly, Foxconn has its hands in industrial AI and automation. Foxconn invests heavily in automation to improve production efficiency and reduce labor costs. Through its Foxconn Industrial Internet subsidiary, the company provides industrial AI solutions, smart factories, and machine vision systems. It uses this technology not only internally, but also offers it as a service to other manufacturers. This segment supports Foxconn's shift toward Industry 4.0 and digital transformation, enabling predictive maintenance, automated inspection, and smart logistics. Here's the top 10 things all investors should know about Foxconn. And after I'll tell you if I'd buy. First is iPhone King, but diversifying fast. Foxconn's the world's largest contract electronics maker, assembling approximately 70% of Apple's iPhones, but it's pivoting hard into AI servers and EVs. This diversification could reduce Apple dependency, but brings new risks in unproven markets. Second is AI server boom is their golden ticket. Foxconn's AI server revenue is projected to surpass iPhone revenue by 2027, with Q1 2025 sales already doubling year over year thanks to Nvidia's GB200 GPUs. This high-growth segment is a major bullish signal, but it's tied to volatile AI demand. Third is India expansion, $1.5 billion bet. Foxconn's investing $1.5 billion in India to boost iPhone production, aiming for 25 to 30 million units in 2025, and build a $433 million semiconductor plant with HCL Group. This move diversifies supply chains but faces tariff and regulatory hurdles. Fourth is currency woes cramp their style. The Taiwan dollar's appreciation in 2025 forced Foxconn to cut its full-year outlook, despite a 91% Q1 profit surge. Currency fluctuations could erode margins, so keep an eye on forex trends. Fifth is EV ambitions, high risk, high reward. Foxconn's pushing into electric vehicles, with deals to build EVs for Mitsubishi and plans for 2 models in the US by 2026. It's a bold play, but the competitive EV market and past flops, like Lordstown, raise red flags. Sixth is tariff troubles loom large. US tariffs, 32% on Taiwan, 30% on China, threaten Foxconn's margins, especially since most iPhones are made in China. Their Mexico and India expansions aim to mitigate this, but trade wars could still sting. Seventh is semiconductor push, France and beyond. Foxconn's exploring a €250 million plus semiconductor facility in France with Thales and Radial, plus the India chip plant. These moves position them in a high-growth industry, but execution risks and long timelines could delay returns. Eighth is stock struggles, underperforming the market. Foxconn's stock dropped 7% in 2025, lagging Taiwan's broader index. Despite a 3.2% pre-earnings bump, investor confidence is shaky due to tariffs and currency risks. Ninth is Nvidia partnership fuels AI dreams. Foxconn's building an AI factory in Taiwan with Nvidia, housing 10,000 Blackwell GPUs, and expanding AI server production in Mexico. This tight Nvidia tie-in is a growth driver, but over-reliance on one partner is risky. 10th is Wisconsin whiff haunts credibility. Foxconn's overhyped 2017 Wisconsin deal promised 13,000 jobs, but delivered only 1,100 by 2024, costing $3 billion in subsidies. This history of under-delivering could make investors wary of big promises. So Foxconn has been an interesting stock over the last 5 or 6 years, which is how long Green has been pitching it. Basically, the stock has performed about as well as the market since January 2019. Right now, there are a lot of things that should concern investors about Foxconn. Foxconn operates heavily in China, which exposes them to tariff issues and geopolitical risks. There's currently a pause in the tariff war between America and China, but who knows how that will end up. Additionally, Trump seems ready to slap a huge tariff on iPhones, which could slow down iPhone production. About 40% of Foxconn's revenue comes from manufacturing iPhones, and a slowdown in iPhone sales would hurt them significantly. However, Foxconn is diversifying away from Apple and has struck gold with AI servers, making up about 40% of the global server market. Revenue in this sector has skyrocketed in recent years due to the growth of AI. I'd probably wait for the tariff situation to be resolved before investing in any Chinese company, to be honest. Once that's settled, I think an investment in Foxconn will likely perform about as well as the market like it has for the last 6 or 7 years. But it would probably be a lot safer to just invest in a market index. If Chinese stocks do interest you, watch the video below. Shah Gilani says he knows a Chinese AI company that's the best stock to buy, and I'm actually invested in the stock.